All right, everybody, welcome back to the Cash Flow Chronicles. Today, I had an opportunity to listen to the earnings call on my drive home, and I would say my perspective compared to my initial gut reactions that I had looking at the numbers from Q2 earnings to when I listened to the call, I would say I flip flopped 100%. And I think I I would want to say before I let kind of Chris enter the conversation, because I know he already had a great conversation with our friends at Finance Junkies, but the thing that I initially I think let get to me was the continued slowdown in growth and the continued kind of slowdown in net dollar retention and a lot of these key metrics that Palantir guided for in the right direction. I think the thing that hit me in the gut the most looking at it was the customer growth slowdown comparatively year over year than what we saw in Q1 of 2022 to 2023. And so with that, I still think 30 odd percent continued growth year over year for customer count is in the ballpark of where we need to be. And I think listening to the conference call itself gave me a little bit more of a jolt back to thinking about the long wavelength that Palantir is truly on comparatively to maybe the current numbers. And what do I mean by that? We haven't had the true opportunity as of yet to let AIP flow through the system. We had 1 month where you actually had it formally rolled out, and maybe 4 or 5 special companies that had the opportunity to look at this opportunity ahead of, say, everybody else in June. And listening to the conference call, it gave me a little bit of more understanding as to where we are in the next 12 to 18 months of the cycle. Now, for me, looking at this, and then I'll hand it back to Chris, I will say Palantir continues to be on watch in terms of revenue growth. It is somewhat scary. And the thing that I'm going to be looking out for particularly is at the end of the month when Snowflake reports, what's their revenue doing? Are they also seeing this continued slowdown in growth as well? And the reason why I'm not as surprised after listening to the earnings call is at this moment, just based off of how Palantir kind of grows their partnerships with everybody, AIP, as we know, is still very much in its infancy, has yet had the opportunity to truly expand and scale, has yet to truly even get ramped up at, several hundred organizations. It's really still in its trial phase, and they kind of iterated it very well. They kept talking to the last 10 weeks, the last 10 weeks, the last 10 weeks, and it's true. June 1st was really the start of a 10-week campaign. And the thing is I was really starting to think that day one, we'd get new customer growth. And day one, we'd start to see a little inkling of revenue. And in reality, we know how this company works. We know what's going to happen in the long term. And so I think I was letting my emotions and the hype of the stock being up 180% and everything started to I kept my calm, I would say, for probably the last month of everyone just getting so hyped up about what was going on. And I let it hit me all at the last moment when I was looking through the numbers and being like, okay, I know, like you probably heard me say last week, I'm not concerned about Q2 earnings. I wouldn't be surprised if they report in line, yada, yada, yada. And here I am, like initially listening to the Finance Junkie call with everybody talking, and I'm frustrated. And I didn't have the opportunity to listen to the call yet. I was at work. I was just looking at the numbers raw. And after listening to Sham, after listening to Karp, and after listening to the CFO talk through everything, it really puts back into perspective where we're at and how far ahead of the competition Palantir truly is and where we will go, not only now, but in the future, because, and I think this was something that was said very late in the Q&A session, American enterprises and global enterprises are just getting to the point where they're fully understanding what they need to do to implement themselves to be a modern enterprise. And before, they were just mostly using Excel and Microsoft Teams and thinking that that was the digital transformation that they needed. And in reality, they're just opening their eyes to what they need to do, which is ontologies, large language models, and having the appropriate artificial intelligence and back maps in their organizations to truly utilize that and leverage that going forward. So, Chris, I realized I just had a 5-minute monologue. Anything
That's good.
like makes you initially feel, or do you just want to hop into how you felt listening and looking at the earnings call?
Well, to me, let me just unshare the screen real quick, and then I'll do my own quick diatribe. My holdup with Palantir is not that I'm bearish on the company. I think the company's mission is amazing. Like if you can't get behind the mission of this company, I'm sorry, you have no heart. Like literally, it's protecting democracy. So I'm not against the company for its mission, which some people are. Like if you look at the people arguing against Palantir's adoption in certain companies, the main reason is primarily driven by politics. And mine is completely opposite from that. My thing is the valuation. The valuation is stretched. And the thing is, when you have a stretched valuation, it's just very hard to justify paying such a high price. And it's okay. Some people can wait around for this price to basically go forward, right? Me, I'm an opportunistic, and that's just who I am as an investor. So I'm looking at things from an opportunistic standpoint and saying, look, I think the valuation right now is a little too high. And based on any metric that you're looking at for Palantir, it really is very high. But that doesn't mean that the numbers aren't reflecting a positive trajectory. Because I think that's one of the things that actually makes me bullish on the company, but not at these prices. And that's the unfortunate thing, because I know some people think that I'm like an ever bear, and I'm not an ever bear. I have a price that I think that it would be a fair value for Palantir. And I'm actually going to go over some of the quick numbers that I had in between Finance Junkies and doing this Disney thing that I could actually show you guys, and just show you where we've actually come from last year versus where we are today, and then we can go from there. So you can share that screen real quick, Matt. There you go. So this was filed with Palantir's earnings, and this is very, very clear consolidated statement of operations. You can see that the revenue right now on a per quarter basis is about 533 million, which last 6 months is about a billion. What's very interesting is in terms of cost controls, they've really adopted a stringent amount of cost controls. So you can see here from an operating expenses standpoint, they've only gone up by 4 million, but their revenues have gone up by 60 million, right? So they're trending in the right direction. This is what you kind of want to see for a business where they're actually making the positive steps in order to be more shareholder friendly, right? You want to have a company pivoting in a direction where they're not just diluting shareholders, where they're not just selling, hiring people that are providing no real value. And I think that's one of the key things with most companies right now on Wall Street, that they all realize that the age of unprofitable growth is behind them, and that they need to now pivot to things that actually work. So Palantir really has taken a big step towards that. And I mean, these guys went from an income loss of about $276 million last year in the first 6 months to actually a positive $50 million in income, which is amazing. The problem is the valuation is still relatively high. It's $38 billion market cap company for a price that's like this. So do I think Palantir eventually gets to a value that it's $18 and $20 is fair? Absolutely. Maybe it could happen by 2025. Maybe it could happen at 2026 levels. But right now, I don't think is the time that this company deserves to be at a 18, 19, $20 valuation. This company should be trading more around $10. And the thing is, when things are good, it's easy to overlook valuations, and it could say, you know what, I don't mind overpaying. But let me tell you, when the bad times come and people are looking to trim companies from their portfolio, they're going to trim the ones that they feel are overvalued. And that's just not me. That's like generally how the market operates. But one of the really great things, like I said, with Palantir, they've really, really taken a good measure of reducing down their expenses. So if you look at right here, this is for the last 3 months. They went from $11 million in cost of revenue to 8. Their marketing and their sales, they spent 50 million last year. Now they only spent 38. So you can see overall they're trending in the right direction. What I liked is that they didn't cut too much in R&D. Whenever a company starts cutting so deep in R&D, that's like a bellwether that, there's there's not much in terms of innovation left in the company, and they're just doing a cash grab at that point. So I'm not a fan of when companies like start cutting back on R&D. But overall, from a operating standpoint, the business is trending in the right direction. When you look at a company from an equity standpoint, they're $400 million more equity in this company now than there was in the past, right? I mean, the share counts have gone up also. So once again, if the shares go up, the value of that equity is going to be lower on a per share basis. So that's one of those things that we have to be a little bit more concerned about. But overall, they're in a good place. The cash that they have on hand, they're utilizing it correctly, which is putting it into short-term investments in like treasuries. So you can see here their interest income actually jumped. So in 2022, when interest rates were really low, they were only generating about $2 million every 6 months, which is on an annualized basis of $4 million of income, to almost $51 million in the last 6 months of this year. So if you think about it from a capital standpoint, by the end of this year, they'll have generated almost $100 million in just money, interest income on the money that they are just putting on the side, right? And they're also at the same time generating more free cash flow. So their free cash flow is growing really, really well. So there's a lot of positives to this company and the direction that it's trending. So I think if you have a very, very long-term view of this company, it's not a bad company to be invested in. My only thing is just remember that you're paying a significant premium to what it should be worth according to a lot of metrics that most people would use. The other thing is their growth has slowed down significantly. But their operating expenses have gone down even more. So in terms of business operations, that's usually a good sign. Um, with regards to AIP, they're making all the right moves from a product standpoint, which is they're not pricing it so it's unaffordable where no one tries it. They understand that they're going to be one of the things that I hope that they don't, that I sometimes wish Carp would back off from, is saying that we're doing things that only we can do. No, that's not how any company works. The minute you think that you're the only guy that can do X, there's going to be 10 other guys that pop up that can start working on whatever you're doing, right? So I think right now with AIP that there's going to be other competitors out there that are providing similar things, maybe not as good as Palantir, but to say that we have no competition is in my opinion disingenuous. So I would say, Carp, just cut that out. Just be like, look, we have a best in class product that we're doing everything we can to market it out there and get as many people on it so that when people realize the value, they become long-term customers. Not just we're the best and no one can beat us. Like, okay, congratulations.
Yeah, yeah. No,